Sage here for Kalkine Media. Thank you for watching and please stay tuned for our earnings bell on Monday. On Monday, the Australian markets had a strong start of the week as ASX 200 closed the session up by 62.2 points or 0.91% at 6,868.9. Today, according to ASX 200 futures, the market is set to continue its trend with a 24 points higher opening. ASX-listed Domain Holdings Australia Limited has declared its financial results for 6 months ending 31st December 2020. The group's revenue is down by 3.8%, reaching 137 million Australian dollars. DHG noted that the financial results demonstrate its ability to capitalise on the current opportunities while purposefully investing in long-term growth. The company is laser-focused on the elements it can control and execute on the opportunities that they have. There has been a decent decrease in expenses. Therefore, despite recording lower revenue, the company increased its EBITDA by 18.9% to 54.5 million Australian dollars. However, citing uncertainty on COVID-19, the management has decided to defer consideration of a dividend until the full year results. Moving on to SG Fleet Limited. This ASX-listed company has reported strong earnings for the 6 months ended 31st December 2020. The growth reflects its corporate business's strong performance and accelerating recovery in novated. Despite the coronavirus-induced demand disruptions, the corporate businesses in Australia, the UK and New Zealand delivered strong results, which helped offset the anticipated lower deliveries in the novated business in the third quarter. The net profit after tax was at 25.4 million Australian dollars. SG Fleet received no JobKeeper payments during the period. The total net revenue for the half year was recorded at 98.2 million Australian dollars, up 1.3% from the corresponding period of last year. A pleasant announcement for the investors. Earnings per share was reported at 9.71 cents. The company's board declared a fully franked interim dividend of 7.192 cents per share to be distributed. While talking about the outlook, the company predicted that the order book would grow stronger and anticipated an excellent second half. Next is the ASX-listed Software Solutions Reckon Ltd. The company reported strong bottom-line growth for the year ended 31st December 2020. A strong investment in cloud-based product development and capital allocation strategy benefited the tech firm. The net profit after tax was recorded at 9.7 million Australian dollars during the period, and earnings before interest, tax, depreciation and amortisation continued to grow 6.6% from 30.6 Australian dollars to 32.6 million Australian dollars. Reckon noted the strong execution of its strategy during 2020. It continued focus on investing in cloud-based product development to meet the client demand. The revenue reported a marginal rise to 75.6 million Australian dollars, with subscription-based revenues across the group accounting for nearly 85%. Owing to the robust growth, Reckon declared an 0.02 Australian dollar fully franked final dividend, and the total dividend distributions for the period stand at 0.05 Australian dollars per share. Reckon states that it is increasingly well placed for growth with a clear plan for 2021. With that, I'm Sage reporting here for Kalkine.